One predictable daily candle can genuinely retire you. You just need to know with certainty whether it is likely to trade higher or lower. You don't need to know every candle like educators tell you. You just need to know one predictable one. With this strategy, you will no longer need anything else. The framework is simple and easy. I've broken it down so that it is very simple. Some of my private members I have currently have made 5 figures and more with this. So let's not waste any time and dive straight into what I'm talking about. What exactly I am talking about starts with a dealing range. Always starts with a dealing range. For this to be valid, you need to be in a discount. So we're on the gold chart on the daily chart here because the daily chart is all you're focused on, and the recent price action within the past 20 candles or so is the main thing you need to be focused on. So we have outlined a dealing range, an impulse price swing higher and a swing high that brought us back into the range. So from range low to high, you have equilibrium. Around equilibrium, if there is an order block there, meaning a down close candle around the equilibrium price point, does not have to be exactly on it, but around that price point, you can see a retracement down into there and then a predictable next daily candle. What exactly does this look like? So we have our dealing range, and if I remove that, you can see we have this down close candle. Now I'm going to make this orange so you guys can see it and remember it. This provides the framework. If we start to create a swing low around this point, the framework is there for you and you can predict the next daily candle as soon as what? As soon as we create that swing low. Reverse everything I'm saying for selling as well. Okay, so this model is literally all you need, and it's what I teach to people all the time. The problem is people can't wait for this to appear. Now, dealing range low to high, equilibrium, order block. What you are waiting for now is a daily swing low to form. A daily swing low because we are taking out sell stops whilst doing that and showing displacement to the upside. So look what we do here. We have a candle low and we dig deep into that candle's low and subsequently the order block at 50%. So we are starting to create a swing low. You are not trading this until the swing low itself is actually created. Now you are waiting for this candle to be created. If this candle here, the third candle in this formation here, because we took a low, we dove deep into it, and then this candle is an inside candle. So if this candle here does not take out the previous candle's high or the previous candle's low, we can expect the next candle to be an expansion candle. Okay, now let me recap that. Swing low, we're predicting a swing low to form. If this third candle here does not take out the previous candle's high or the previous candle's low, the next candle can be an expansion candle because small ranges lead to large ranges. And large ranges lead to smaller ranges. So we have a consolidation in here. We drop down and create that swing low. Let's dive deep into the lower time frame so I can show you exactly what we're talking about. I will outline this candle as well. Drop into the hourly time frame because daily to the hourly really makes this thing clear. What do we have? Remember, we have that candle's low here broken on Thursday. So Thursday sweeps the candle's low. And remember, this is our order block. We have our daily order block at equilibrium. Now, Monday's candle opens up there, right? And look what we do. First of all, look what we have here. We have buy stops that rest above there. Buy side liquidity hangs above this because we have a consolidation, retracement, drop down, consolidate, expand, retrace, and now you are looking at this candle. Remember I said this candle was very small. If I actually put the divider on this candle, from here to here is that inside candle. And remember I said inside candles lead to larger candles. So you're predicting the next candle to be an expansion candle. If I put another divider where this candle ends on Tuesday, Monday was a large expansion. So any PD array here should now hold for higher prices. Why? Because this was our inside candle. Once this candle closes at this point, right there, you've had a swing low be created into what? Into our key level. Remember the dealing range here. into the key level. The swing low at this point is created and we're trading this candle here. That's all you need to wait for. At that point, any fair value gap, any order block, anything will hold. You can see there's an hourly gap there. And if we drop even lower to the 15-minute time frame, you can see this framework very clearly. We have the consolidation, the highs up here, and that inside candle there. You are now worried about this candle and this candle only. That's exactly why I say you only need one candle. If that candle is predictable, this will pay you for the month. This will pay you for the week. This will get you payouts. You don't have to worry about trading any other candle as long as you can predict the next one. The problem is most people are trading candles that they can't predict. Once it's predictable, it all becomes easy. So we have that expansion from the hourly fair value gap. We then run much higher and look, 8:30 New York time, what do? We consolidate into that time. So then we drop back down into a discount array here because we're in an expanding market. So it does not need to come all the way down here. Why? Because this candle should be expansion. This should be quick. We look for a sell side liquidity sweep here and a sell side liquidity sweep here. Notice how any stop run inside of these candles leads to expansion. Now, you might be worried that this is going to drop down more. It shouldn't because we're in an expansion candle. And at a key time, this is New York session. This, you might be worried that we drop down more, but it doesn't need to because this is consolidation and then we sweep the low and expand higher. So all through that one candle being predictable, you have just caught a massive expansion higher. The same thing applies to the next candle. If we haven't taken out the buy side liquidity, the exact same thing applies to this candle over here. So if I remove all of this back here, if I get rid of all of that and I get rid of the dividers here, we are now focused on this candle as well. Let me add this back on there. You can now focus on this candle as well. This candle is also predictable. Why is this candle here predictable? Because this buy side liquidity and this swing high, remember, you can target swing highs with this. This has not been tapped yet with this candle. So you're looking for this candle to be predictable as well. This should be buy side expansion. Again, because we haven't hit a key premium array. Key premium array being either this high here or the rejection block at this point. That rejection block there is your target for the week because this was Thursday, Friday created the swing low and now Monday is ready to expand. Tuesday should expand as well into the daily rejection block. That's your weekly target. As soon as that weekly target is hit, you move to the sidelines. So take a look here. We go back down to the 15-minute chart here. We get a stop run before that candle starts. So if this candle is predictable, should this need to come much lower than this low? No, this is inducing sellers. So when we drop down here, retail are selling and everyone who's bought from here up here are buying still. Their stop losses rest below here. They're panicking, right? But we know because of this new candle started and the framework on the daily chart that the candle is actually predictable, we know that we can be buyers under any lows. Any lows we can be buyers, especially if that low coincides with a PD array. PD array being what? A gap in the previous top half of this candle. So let me make that clear again. These are the two predictable candles. This section from here to here and this section from here to here. So if we are predicting the next two candles to be expansion candles and you're trading the second candle, the first candle is really easy because it should already expand from there. If we've created the swing low, it should be ready to expand and it should be quick. It shouldn't waste any time. The second candle, the second predictable candle, if we have a key discount array in the top half of the previous day's range. So what's the previous day's range? The lowest low, which is there, to the highest high. We should not come back down into a discount of here to here. We should not drop down into a discount of the previous candle's range. This should be enough. Why? Because we're looking for an open, a low, a high, and a close. What does that look like in a depiction? If we're looking to be buyers, we have an open, we have a low, we have an expansion. This should be on the other side. So that's the open, and then you have a close up here. You want to be buying from this point down. So the best buys within this expansion candle happen below there. So when we open up, you are looking below opening price to be a buyer. Price does not need to come back down all the way into a discount of the previous candle's range because of that open, low, high, close concept. So when people are waiting for drops down, back down into here, we do not need that to happen because of what I outlined. The open is giving you a relative premium and a discount. The opening price of this daily candle that we are predicting to expand is giving you all the discount you need. Notice how we run sell stops after the opening price. That's your due to swing lower. You can be a buyer below that low. Why? Because it's inside of what is technically a discount array. So remember, arrays in the top half of the previous candle's range are key discount arrays for you to frame longs off of. We then expand higher. Going into New York session, we drop down. London close gives a continuation play. Again, doing the exact same thing I just outlined. Now, if you watched my previous video, this is a continuation of that. Remember I said any key discount array will hold price to go higher. Why? Because it's already set to expand. That's the thing. The next daily candle is predictable. When the next daily candle is predictable, all your discount arrays, all your fair value gaps, all your order blocks, all your stop runs will hold for higher prices because it's predictable now. You can be a buyer there just before London session and then we expand during London session, or you can wait for New York and we get the exact same thing we got here in London close and New York session, and then we expand, then we consolidate into close. Now, all of that framework came from two predictable candles. It didn't come randomly. It came from this that I outlined on the daily chart. Remember, if I remove all of this, the original framework all came from a premium and a discount. Discount, order block, rest in equilibrium. We then wait for the swing low to be created. You have to wait for that swing low to be created, and then the next candles are predictable if we haven't hit any premium array. There's a key premium array there with a swing because this has a lower high to the left of it and a lower high to the right of it. There is also a rejection block at the high. Okay, I've given this framework to my private Discord. They won't be very happy with me that I'm sharing this. Now, there are a few little nuances that I've left out that I cannot fully give to you guys on YouTube, and I'm sure you understand that. But with this alone, you can become profitable, and I mean that. I recently in the past 2 months or so, got 400k funded, max allocation with FTMO. Now, or you can head over to my Twitter and actually see that certificate, and it's verified, it is real. Okay, I'm not one of these educators who just talks. That is on my Twitter. I will pin it for you guys to go over and see. And I got 400k max allocation trading what? Trading this. Trading predictable daily candles. I'm not trading random candles. Very predictable ones. Now, if you take a look here, what else do you see? After all that move has happened and you've caught your expansion, what happens? Well, we hit a premium array and then we do what? We create a swing high. Notice how, and also this is in a premium because we have a high to low. Remember, this is still a premium. Above 50% is a premium. We hit our premium objective. Now we're waiting. Do we show rejection? Do we create a swing high at this point? Yes. Take a look. Candle's high gets taken, obviously, into our premium array. Keep that in mind because I'm removing the line now. That high gets taken. At this point, you're waiting for a swing high. Are we going to continue bullishness? If this candle doesn't take out the previous candle's high, which it doesn't, and doesn't take out the previous candle's low, We have an inside candle. So does the next daily candle become predictable? Absolutely. So we have the inside candle and now the swing high is created. This high is lower than this high, and this high is obviously lower than this high. That's a swing high with an inside candle. Exactly what I outlined here. It is also into a premium array. This wick is a premium array. The algorithm treats wicks like gaps. And if you remove the wicks here, you would see that is buy side liquidity that got ran out. Another premium array. Then we create the swing high here with an inside candle. So the inside candle is key because small ranges lead to large ranges and vice versa. So at this point, you can wait for the next candle. It's predictable. It's predictable to trade into where? A key discount array. Now, if we have a new range here because we have a new impulse low to impulse high. If you fractalize this, this is your larger dealing range and this is your parent price swing and this is your child price swing. It's a smaller price swing inside of a larger price swing. This is a discount, this is a premium. We're trading at a premium and at a premium here. At a premium array, create the swing high. Anyway, where do you target? A discount. Below 50% here, from here to here. Order block, right? The last down close candle before that move up. Exactly. This is where you target. So on this day, this candle is predictable. Remove all of that and let's dive into this candle on the lower time frame. What do you think is going to happen inside of this candle? Let's go to the hourly time frame. Now, you want to mark up midnight there. Look at the framework here. Remember, our discount order block can be defined back down to the order block there and the fair value gap there. That is a discount. Remember, discount, premium. We take out all of this consolidations highs into a premium fair value gap before the next candle. We then show rejection before the next candle. So what are you now waiting for? Well, this candle's predictable. So you can now wait for a Judas swing. We drop straight from midnight New York. People panic and sell down here. You, as a smart money trader, as you consider yourself, should not be panicking at this point. You absolutely should not be worried about missing this move. If you miss the move, fine. You also get a retracement when? During a key time, New York session. Why does price not come up to this premium fair value gap and this balanced price range here? Why does it not need to? Because if you take a look here, these down close candles act as a breaker block. Because we have a high, we have a consolidation first of all. This is classic accumulation, manipulation, distribution. We have these down close candles that are your breaker. High, low, high, high. Once we trade below, this area becomes mitigation. Price should not go above this area if we are bearish. And look what happens. We trade into it during New York session and then drop down into our discount array. Is this candle here not one of the easiest candles to trade? Where does the candle end? Right there. Okay, Thursday's candle is very, very easy. High, low, trades into the breaker, and it sells off into, go back to the daily time frame, into this order block. So this model I just gave you, waiting for a swing high to be created. If the swing high or low, the third candle that creates the swing high, that confirms the swing high, if that is an inside candle, meaning it doesn't take this high out or this low out, the next candle can be an expansion candle and it can be huge. So if you only traded this candle, let's say you even missed that candle. If you trade this candle and this candle, is that not more than enough? Do you not think you could catch an easy 1 to 3 within that one candle there? I think you could, and the guys within my Discord will agree. They see this all the time. This is the main framework I use to catch expansion moves. You do not need to predict every daily candle. You don't need to predict every hourly candle. One daily candle becomes very easy once you're focused on it expanding. And that is what I preach inside of my private mentorship. Now, like I said, they're not going to be happy I'm giving this away completely, but I'm sure they understand. And there are certain nuances that I teach in there that I will simply not share publicly. Okay. Now, if you want to learn deeper, my mentorship is open for a bit longer. There is a link in the description that will take you over there, and I have opened up a free Discord. At the time of recording, it is Saturday. I am opening up this Discord for free that you can enter for free, and I will post some trade ideas in there. I will drop a link to that in the description as well. It will probably be the top link in the description. Now, it opens up tomorrow, and this video does drop tomorrow. So when this is out and at the time of watching this, that free Discord is open. I'm going to be dropping some recaps that are from trades, I take in the private mentorship inside there, breaking down exactly what we did in real time. Now, within that Discord, I will post the outlooks, like I said, and the recaps, and I will be active in there giving advice to a certain extent. Of course, my main focus is the private mentorship, but for those of you who do want to learn for free, in the Discord, I will be in there. So please do check it out in the top link of the description. It's free, of course, and you don't need to pay anything. But yeah, focus on the expansion candles. Only focus on these expansion candles, and anything else, just remove it. You don't need anything else. You can pass any prop firm you want with this. Again, I got 400k funding with this model. I swear I did not trade anything else, just predictable daily and weekly candles. With that being said, I will leave you guys to go back test this yourselves and take a look at the strategy, and also take notes on this. If you did enjoy the video and find it valuable, please do drop a like. It helps boost the algorithm and helps me reach more traders and hopefully get more people in the Discord and learning these things properly. Drop a comment with any feedback and subscribe if you are new. Don't forget to subscribe so you never miss a video. With that being said, I thank you as always for watching, and I'll catch you guys in the next one.